In this video, we'll show you the investment that Cathie Woods says can 15x in 5 years.
The stock is $270. Our prediction in 5 years is $2,600.
And we'll see 5 of her most bullish investment positions.
According to our research, these investments will go up more than tenfold.
So let's start with number 5. Cathie has $310 million invested in Palantir stock through her ARK investment fund, and it makes up 4.3% of her overall portfolio at ARK.
Palantir is a platform as a service company which we think is not only going to help governments move into the digital age, but also these huge enterprises, because it's not forcing them to rip and replace anything. They'll build on top of whatever technology infrastructure is there, and over time just usurp the role of the legacy technologies.
It's a stock that's been doing extremely well recently. It's up 1,400% over just the past 5 years, one of the best performing stocks in this period. Before we get into the investment that she says can 15x, let's look at stock 4. Coinbase is a huge position for Cathie. She owns around $620 million of the stock with ARK, and it makes up around 8.8% of her overall portfolio.
Coinbase is an exchange for digital assets. It has gone global. It just bought Deribit, which is the largest options exchange out there. And it is the most regulatory compliant exchange in the world. It also wants to become part of the new payments infrastructure, and so is evolving strategies that way as well.
Coinbase as a stock, it has had a very volatile journey, IPO'd in 2021 for $340 a share, then almost immediately going into a collapse to $35 a share, and now in 2025 it's back to an all-time high of $390. If crypto has a big future in America, odds are Coinbase will do quite well. CRISPR Therapeutics, Cathie owns $400 million in the stock, and it makes up 5.9% of her overall portfolio. So, what is Cathie's thesis on CRISPR Therapeutics?
We think the most profound application of AI is going to be in healthcare, and this is already beginning to happen. We are able to diagnose cancer with a blood test in stage 1, maybe even before stage 1. Why? This is the convergence of sequencing technologies, so DNA, RNA, protein sequencing technologies. And then the third technology that is breakthrough and already making a difference is CRISPR gene editing. The convergence of those 3 technologies is beginning to cure disease.
Considering all of the crazy innovations that are happening in the world today, it shouldn't blow my mind, but it does. Gene editing to cure diseases? Really? Is this how advanced we have got to now? It turns out, yes. CRISPR creates one-time, potentially curative treatments for a variety of serious diseases. These include sickle cell disease, beta thalassemia, certain cancers, and type 1 diabetes. The company's platform allows precise edits to DNA, enabling the correction of genetic defects at their source. So at least for sickle cell and beta thalassemia, both of these potential cures have actually been approved by the FDA, but with the cancer and the type 1 diabetes, these both are in the early trial phase, so we're not quite there with those 2 yet. Nevertheless, the thesis for the stock is pretty clear. If these disease solutions prove to be practical and used en masse, there's a lot of money on the table there, because these diseases are so popular everywhere around the world. If a company solves the diseases, so much money will be thrown at the cures. But if they don't prove to be useful, well then CRISPR are basically burning money researching these cures. If we look at the stock itself, you've got a company that has struggled a lot. It's down from a price of $200 and now it's $50. The fundamentals will give you a real good picture of why the stock is down. They're not easy on the eye, to say in the least. You can see that sales, they really peaked in 2021 with 913 million, and then since then just down to 370 million, and 2024 was just abysmal at 35 million in sales and negative profit earnings of $366 million. It's been these type of investments that have really hurt Cathie Wood. She invested in this stock back in 2017, and it just shows you that not all of her picks are winners. So you got to look at her positions with a bit of caution. But this next one has been a winner. Okay, this stock is actually Cathie Wood's #1 stock position. She owns $685 million of it, and it makes up 9% of her portfolio. This is not the 15x investment. We're going to talk about that next. But if this one goes according to Cathie's projections, it's still an 8x stock.
We're on record saying we believe in 5 years the stock will hit $2,600. And that's not even including humanoid robots, which are now moving into the Tesla ecosystem much faster than even we expected. So more than a tenfold increase just from robotaxis. We believe that the entire ecosystem associated with autonomous taxi networks is going to be worth $8 to $10 trillion in terms of revenue generation in the next 5 to 10 years. I'm looking to buy another Model Y because it will in effect be a cybercab. And if I chose to, I could have my Model Y drive me to work and then let it out for the day and earn money on it, have it pick me up at the end of the night. And some people will do that, and Tesla will provide the platform for that. Our prediction in 5 years is 2,600, and 90% of that valuation comes not from the electric vehicle, but from this robotaxi platform.
So yeah, 2,600 would be an 8x increase at the current price levels. Even right now, you can see that some of the numbers are quite pricey. It sells for 190 price to earnings ratio, a 13 price to book ratio, and around 150 price to free cash flow ratio. Now, granted, you are buying a stock that has historically grown a lot. Over 3 years, revenue has grown by 15%. 5 years, it's grown by 30%. And in the last 10 years, it's grown by 39%. So in its past, it's increased by a lot in terms of fundamentals, and Cathie's predicting in the next 5-10 years, it will keep doing so. So why does she predict this? A key reason is because of the huge potential of Tesla's robotaxis.
The entire ecosystem associated with autonomous taxi networks is going to be worth $8 to $10 trillion.
Let me explain how robotaxis work. Tesla is building a self-driving car that works like Uber, but without a driver. You open the app, a Tesla picks you up, drives you to your destination, all on its own. Why it can make Tesla a lot of money? Well, no drivers equals huge cost savings. Tesla can earn money from every mile driven, not just from selling their cars. It's basically like turning every Tesla into a money-making robot. If it works, Tesla won't just sell cars, it'll run one of the biggest taxi networks in the world. And this is where Cathie believes most of the money will come from, because it's such a huge market. Every country in the entire world uses some form of taxi, and Tesla could be able to deliver a taxi service at a much cheaper price with no driver as the main expense. It's obvious to know why they can do it so cheap.
In the US today, an Uber costs roughly $2 to $4 per mile. At scale, we believe that Tesla will be able to offer a service for 25 cents per mile.
So they can reduce the cost by 10 times the amount, at least according to Cathie. And on top of this, Tesla can obviously just keep selling their cars, continue with their energy generation and storage, and then you have their humanoid robot segment.
Tesla's way ahead of the game on humanoid robots. Now, Elon thinks that the humanoid robot business is going to dwarf the robotaxi business. And we think he's right. For humanoid robots, we expect a $26 trillion revenue market. Now, that's going to be a little further along. Robotaxis will happen faster, but it may not be as distant as we were once thinking.
What is this humanoid robot thing that she is talking about? Some of you might know this already. Tesla is building a robot called Optimus. It looks like a human and is designed to do boring, repetitive, or dangerous tasks, starting in Tesla's own factories. So the a big vision. Elon wants millions of these robots working in homes, factories, and cities. Long term, Optimus could do your chores, cook, clean, care for the elderly, even go to work for you. If Musk can pull this off, these robots could become as common as smartphones and cost less than a car. And that would create an entirely new trillion-dollar market with Tesla leading it. Musk has even said himself that Optimus is more valuable than the car business and full self-driving combined. So that kind of gives you a feel for Cathie's thesis around Tesla and why she is so bullish on it. Now, before we get into the 15x investment choice, we have to look at her investment performance in the past. After all, if her performance is no good, probably shouldn't listen to her. So if you look at what's been happening over the past 6 months, she kind of looks like a genius. Portfolio is up 30% versus the S&P, which is only up 8%. However, if you rewind back 10 years, you can see that she's basically got the same performance as the S&P 500, 248% S&P versus her performance of 268%. Granted, she has beaten it by 20%, so let's give her her due and look at the investment that she thinks can 15x by 2030. The investment is Bitcoin, but before we tell you her exact thoughts on it, I want to talk about this stock called DeFi, which has been outperforming Bitcoin for years and is the sponsor of today's video. As you can see, its 1-year performance is 122% versus Bitcoin's 75%. Its 2-year is 3,474% versus Bitcoin's 238%, and its 5-year is 9,000% versus Bitcoin's 1,000. So it got 9 times more return than Bitcoin over 5 years. DeFi recently graduated to the Nasdaq, and you can find it under the ticker symbol DEFT. Now, we do need to ask ourselves, how has it achieved such a strong return consistently? DeFi Tech has a profitable business that grows globally with the continuous adoption of decentralized finance and crypto assets. The crown jewel, you can say, which it owns, is Valor, which creates and issues ETPs, exchange traded products, for the cryptocurrency sector. As this image shows, at the end of May 2025, Valor had $800 million under management, and it monetizes that sum in a very strong way. They can generate approximately 8% on AUM that is staked or loaned. That's a very high percentage when you compare it to other asset managers. Valor, DeFi subsidiary, offers 75 exchange traded products covering basically the full spectrum of the crypto market. One of the core reasons why it's been growing like crazy is because it has the ability to provide institutions who are barred from owning cryptocurrencies outright, but they can own ETPs. So wealthy institutions can just pour money in, and DeFi makes a handsome profit on that money. If we look at the profit from the last quarter, very impressive. They made 40 million in net income, which if you times by 4 is 160 million in a year, which would give it a potential PE under 10. On top of this, they have achieved a record amount of revenue this past quarter. Of course, we have the Trump administration, which has taken significant steps to reshape US cryptocurrency policy, and DeFi has taken notice and made an acquisition that gives it US exposure. All of this while it continues on its global expansion plans throughout many countries around the world. DeFi Technologies are the largest institutional asset manager of Solana in North America, and they own Reflexivity Research, the company founded by Anthony Popoliano. Since DeFi graduated to the Nasdaq, several analysts have begun covering it, along with those that issued reports on the company in the months leading up to that moment. You can actually request that they send these reports to you. You just email the analyst and you can see how they think about all things DeFi tech. DeFi Technologies is one of only 3 profitable public crypto companies, and they have been buying back their own shares, so definitely a stock to investigate. Okay, now let's see Cathie's full prediction on Bitcoin.
Right now, the Bitcoin's around 100, 105,000. Our forecast for 2030 is $1.5 million.
So you think Bitcoin will potentially multiply in value by 15 times in the next 5 years? Mm-hmm. Wow, that'd be pretty crazy.
Right now, we're approaching 20 million Bitcoin outstanding.
So there's 21 million in total, right?
There will be, at the end of the minting process, 21 million. So we have only 1 million to go. Institutions really just started considering Bitcoin because the SEC gave the green light to Bitcoin with the approval of the spot Bitcoin ETF in January of last year. They have have trillions of dollars under management. And so we think there will be a lot of incremental demand. And to satisfy a lot of that demand, someone's going to have to sell.
Which means the price goes up.
Yeah, so that is a big claim that Bitcoin can reach 1.5 million by 2030. A lot of people will look at that statement and say, she's crazy, she's out of her mind. And I don't blame you for thinking that. So let me put it in perspective. So Bitcoin at the time of making this video is priced at around $120,000 a coin, rounded up. This gives it a market cap of $2.3 trillion. If it were to reach $1.5 million a coin, it would give it a market cap of $28 trillion. That would mean it would be more than 10 times bigger than the market cap of Google, which is $2 trillion. It would be more than 6 times bigger, the largest stock in the world, Nvidia, 8 times bigger than the entire GDP of France, larger than the entire GDP of China, which is 19 trillion, and about the same size as the United States of America's GDP, which is the largest economy in the world. So you put it that way, it sounds ridiculous, right? There's no way that a cryptocurrency can be as big as that. Well, Cathie does have an argument against that.
Bitcoin. Could it serve the 3 roles of money? So means of exchange, what we use every day to buy things, store of value like gold, and unit of account. Would prices be quoted in terms of Bitcoin? It's not just a global monetary system. It is a new asset class. And that's a very big idea as well. What makes a new asset class? And we haven't had one truly since equities in the 1600s.
So she thinks that Bitcoin is such a big idea that its worth is actually more than all of the things I mentioned before. It's more than just a single stock. It's more than just one nation's GDP in a year. It's a new asset class in itself and should therefore be compared against the big boys. If you look at some of the other asset classes, you have gold, which has a market cap of $22 trillion. You have bank deposits / cash equivalents, which is worth about $80 trillion. Global stocks, aka all of the stocks in the world, is $120 trillion. Global bonds, $120 trillion. And global real estate, aka all of the real estate in the world, is $400 trillion. Cathie believes it is better to compare Bitcoin to these asset classes as a whole. And if you do, that $28 trillion is probably more than reasonable. So those were 5 of Cathie's most interesting investment ideas. Not necessarily the top 5 largest, although they all were in her biggest 10 investment positions. Which of these do you like the best?